Welcome back. We're going to look at one more exercise in which we will record transactions in the journal, post to the T account, and prepare the trial balance. We've been given 8 transactions, and we've been given the accounts that we need to use. This is a chart of accounts, and we've given us a list of the account names. Further, if you look at under requirement 2, when you post into your T account, they're telling you there are various accounts that already have a balance in them. Beginning balance. Okay, so here's what we'll do. We will work on the journal entries, but before we get started with that, I have my T account set up, and the ones that have a balance, I already have entered that balance over here. Those balances are already over here in our books. So cash, accounts receivable, supplies have debit balances, as does equipment. Accounts payable is a liability, it has a credit balance. Common stock and retained earnings are owner's equity and their credit balance. So each of these have a balance and we have those numbers in. All the others do not have a balance. So let's get started with our journal entry, our first transaction, and see what the journal entry will be. On September 3rd, we painted houses in the current month and we charged $20,000 on account. So we have done the work. We have not collected the cash. We'll get the cash later on. So accounts receivable is the asset I will debit. That tells me that I will get money from my customer in the future. And the reason I'm getting the money is because I have done the work. So I'll credit service revenue. And that's $20,000. Accounts receivable debit. I will go ahead and post it over here. And service revenue credit, $20,000. Move this over here. Okay. The next transaction, I purchased painting equipment for $21,000 cash. So I paid cash. So cash is going to decrease. Cash is credit. It's $21,000. Why did I pay this cash? Because I bought equipment, which is an asset for me. So equipment debit, cash credit. So cash is credited. I'll put that on the credit side. And equipment debit, I'll put that number on the debit side, post into the debit side. The next transaction on the 12th, I purchased office supplies on account. Office supplies is an asset that increased because I purchased it. I didn't pay cash right now. I will pay it later. I know that because I see the word on account. So it's going to be accounts payable credit. The word payable tells me it's a liability. I'm liable to pay. I have to pay. And that amount is $3,500. Office supplies debit, accounts payable credit. So office supplies, I'll add my $3,500 over here. I'll post it. And accounts payable, I will post the $3,500 over there. The next transaction, I'll scroll down a little. The next transaction, office supply, no, I'm sorry, I'm done with that one. The next transaction, I paid my employees $4,200 for the current month. Employee salaries. I paid my employees, which means I got the benefit of their work. When I get the benefit, it's an expense. So salaries expense will be debited. I paid cash to my employees, $4,200. So salaries expense debit, $4,200. Cash credit, $4,200. On the credit side, I will post $4,200. The next transaction on the 19th, I purchased advertising to appear in the current month for $1,000 cash. I paid cash, cash decreased, so I'm going to credit cash. Why did I pay this cash? Because I wanted someone to advertise my business for me. I got the benefit of the advertisement of the service. Hopefully, it's actually going to result in revenues. That's a different story. So advertising expense debit, cash credit, and that's $1,000. So advertising expense debit, post that on the debit side in the advertising account. Cash credit, on the credit side, you'll post $1,000. Next transaction, I pay office rent of 5,400 for the current month. For the month of September, I'm paying the rent. I got the benefit of occupying the office, so it's going to be rent expense debit. I paid the cash, so cash credit. And that's 5,400. So rent expense debit and cash credit. Go back over here and cash credit on the credit side, I post that 5,400. Then they tell me I received $15,000 from the customers in transaction number 1. Just going back to see what that transaction was. I had performed services, I had done the painting, and they had not paid me the money. Now they're paying me that money. Not all of it. They owed me 20,000, but they're paying me 15,000. So I received cash today. So cash is debit 15,000. I'm getting this money because they owed me the money. It's not revenues again. I'm receiving it from a customer, but it's because they owe me the money. So cash debit, accounts receivable credit, $15,000. Let's go up over here. Cash debit, 15,000, and accounts receivable credit, 15,000. And finally, the last transaction, I received cash $6,000 in advance from a customer who plans to have his house painted the following month. So on September 30th, I received cash. Cash is debit, and that amount is $6,000. I didn't do the work as yet. I will do it in the future, and when I do it, I can call it revenues. Right now, it is deferred revenues. The word deferred means postponed. I'm postponing the recognition of the revenue. It's a liability in my books because if I don't do the work, I'll have to return the $6,000. But for now, I did get the cash. So cash debit, I post on the debit side, and deferred revenue on the credit side, I will post it $6,000. Now that I'm done with recording all my journal entries and posting into the T accounts, I need to find the balances in all the accounts. Again, let's go through this quickly. Anything that has a single amount, I'm going to put that color in red to indicate that is the balance. I didn't need to do anything else. Same thing over here. Deferred revenue also had one entry. Okay. Then we have two accounts that have only on the debit side or only on the credit side. Add those up and those are your balances. So added the equipment, added the debit side for the equipment, credit side for accounts payable. That leaves me, and same thing for office supplies. So the only two accounts where we have multiple debits and credits is cash and accounts receivable. As I mentioned before in the previous videos, you add up the debit, add up the credit side. First do that, add up those numbers, come up with the subtotal. Take the difference between the two numbers and put it under the side which is larger. So my cash balance is 35,500. Accounts receivable, again, do the same thing. Add up the numbers on both sides. The larger side is debit. Take the difference and put that number over here. 6,700 is the balance. So now we have gone through the process of closing all the accounts to find the balances. Our last step over here is to prepare the trial balance. Again, the trial balance is nothing but listing of all these accounts that have a non-zero balance. We'll list all the account names. So again, what I've done is just in the order in which they appear over here, I put those down over here. And then I put the balance. If it's on the debit side, put the number on the debit side. So we have cash, accounts receivable, supplies, and equipment. All of these are assets. They obviously have debit balances. I have accounts payable and deferred revenue or liabilities, and those have credit balances. So put those on the credit side. Then you have your common stock and retained earnings. Both of these have credit balances. They're equity accounts. Put them on the credit side. Revenues has a credit balance. Remember, revenues increases retained earnings, so it should have a credit balance. Salaries expense, advertising expense, rent expense, all should have debit balances. Their expenses, which they do, put those on the debit side. So all I've done over here is listed all my accounts that have a non-zero balance. Put those in the relevant debit or credit column, and then add up the two sides. Assuming we've done all our work correctly, your total debits must equal total credits. If not, go back and check. Now what I tell you is if you had to go back and check, first start by checking this cash account. It's because there are multiple numbers you posted over here. Most likely, if you make a mistake, an error, calculation error, it's probably over here in the cash account. But be very careful when you go through each step and bring the numbers over slowly so that you make them, you don't make any mistakes and you do it correctly the very first time. So with that, we are done with chapter 2.